GM. GM. So, update. We're still consolidating below the 200 EMA for BTC. Where's the 200 EMA on this? 50, 100. Why is it 240? Ah, yeah. Change that back to the chart. GM. Today is Wednesday, 17th of Jan. Basically, still expecting Bitcoin to follow this path. Everything below the 200 is a trap for bears, in my opinion. We pushed up and took out these highs once. We took out twice, and then we even pushed higher one more time. I'm expecting prices to go back up. I don't expect that to hold as resistance. I think they're just false breakouts to grab liquidity. Eventually price will push its way back up into this gap here. Otherwise, it's just not, I just don't think it's going to new lows yet. I think the ETF sellers each day get absorbed. I think currently, though, there's a bit of a pattern, and I'll be doing a deep dive for any day traders, deep diving into any edge we can find, and I recommend that you do this too. The dynamics of Bitcoin market have changed forever, right? I think you should know this, should be aware of this. The market now moves at different times based on different flows, and there's definitely edge you can have there, or at least there's potential edge where you can trade off it. So you should be looking for that. One of the things that I've noticed right away, which is obvious, is once you get to this time, like 8, 9, 10, 11 a.m. UTC, the market sort of just steps back until New York open. So if it's on a weekday, especially right now, people are kind of concerned about fucking GBTC dumping again, and just like yesterday with the big wick down, it gets the volatility drops off really at this point. So here it was yesterday morning from 8 a.m. to until New York open, just chopped sideways. Right now, same thing, right, until we have 2:30 UTC, which is the New York open. Again, just wouldn't be surprised if we just sort of chop around there. And it'll take a few days for that. I think just for the market to sort itself out and realize that whatever, their GBTC dumpers are finished dumping, or just in general, the ETF dumpers are finished dumping. But this is all a huge injection of liquidity to the market. The ETF buyers, they might be buying a local top for a little while, but they won't be underwater for long. The global liquidity, as I said, keeps rising, keeps looking healthy. Any corrections are amazing opportunities to buy. There's been 10 billion in volume in 3 days, 3 trading days for the ETFs, which is insane. The run rate is really, really massive. And you want to watch, like, the rest of this week is important too, because quite often, like the BITO, which is the Bitcoin Futures ETF, which launched in 2021, it had really high trading volumes as well for the first few days. Now, the difference is that was in a peak bull market, and Bitcoin was at 60K, 65, 69K for that whole week. So the volumes were higher. This is notional volumes in dollar terms. So the fact that this ETF has been bigger, for sure, and more active and more hype and more volume in a not a consensus bull market in an early stage is more impressive, obviously, and more sustainable. Because like I said, we're still in the recovery phase, right? And don't let anyone tell you otherwise. Like, there's a few different stages to a market, and you have to look at it like that. You've got the blow off top. A lot of people use the Wall Street cheat sheet, as the way of saying that you have your euphoria, your complacency bounce, then you go down into depression and anger and anxiety, then you've disbelief rally, then you've hope, then you've optimism, then boom, you're away again into greed and euphoria and blah, blah, blah. That's all true. That broadly follows. But if you're just looking at the whole, the markets overall, from crypto to stocks, everything is just at recovery stage. It's funny because what I'm seeing like in the stock market is the exact same sentiment I saw over here and the exact same sentiment that I saw over there. After basically a scary dip, right? 2018, everyone thought the world was ending. It's funny how COVID kind of wiped people's memories. It's like the fucking Men in Black thing. The green candles wipe your memory. People think that the COVID crash was scary, and it was because of the severity of it and how much it made people panic. But the panic was like outside the markets. You know, the panic was the whole world shutting down. People forget that a couple of years before that, in 2018, or about a year and a half before that, people thought it was over. Matrix attack. People thought it was over. And they really, really did. This was like the end, and this is what people were screaming. This was the end of the great bull market. It's the end. It's over. When we were down here, late 2018, it was over. It was done. That was when, guess what? Powell was forced to pivot, because this is when the Fed tried to do QT, and they were trying to raise interest rates. As you can see here. If you get an indicator for Fed funds rate, probably shows it. Yeah. Here we go. Take off the RSI, we don't need that. The Fed had been steadily rising rates throughout 2017, 2018. They pushed it too far here, up to 2.25, up to 2.5. Market reacted by having a little panic. It's called the taper tantrum because they were also trying to engage in QT. I wonder is there an indicator for that? QE, QT. I guess US M2 should show it. Money supply. Global M2. It's better than nothing. Here we go. So I'll zoom it way in, you'll see. Right? So the Fed and other central banks were actively reducing the size of their balance sheets here, which is quantitative tightening, which is the opposite of what they did a few months back where they juiced it, right? So they were juicing the markets here. Markets went up because that's just what happens when liquidity rises. And then they were reducing them. Markets kept going up for a while, but then the balance sheet reductions got felt along with the interest rate hikes. Markets started to panic. Fed then panicked because political pressure. And it's a good example and shows you it does not matter who's in office. This is when Trump was in office. And Jerome Powell's a Republican, by the way. At least by name. And it doesn't matter. The political pressure is from whoever's in office to not let the fucking stock market crash. That is mission number one. And the Fed done a 180, paused, then pivoted, and they were already cutting rates before the crash, the COVID crash, and they were already increasing liquidity again. And globally that was happening. But the sentiment at this time was that it was all over, right? Oh, we've had a great run. We've had a 10-year bull market from 2009, up only. Took the highs, crashed, and when it came back up here, People were fading this dip and this dip. They didn't believe it. It was pure disbelief. Market just kept grinding higher. Obviously, COVID happened. Then we had the same thing over here. People were fading that. Markets just went higher. And right now, people think the market is overextended. The stocks bears believe that the stock market is due to crash somehow because it's too expensive when it's the exact same price as it was 2 years ago. Yeah, 2 years ago, sorry. And we've had a correction, and we've had a reaccumulation, and we've had a run-up, and we've had a banking crisis, and we've got through that. And the Fed have shown their hand that we are absolutely going to keep supporting the markets, not pulling them down. And so, far from being crazily overbought, if anything, there can be a pullback. You see this when we take all-time highs. You can have pullback. Markets can pull back. But it's not going to be this massive crash all the way down because, again, the Fed and the governments have shown they're not going to let that happen in an election year. So, there's different phases, right? You've got like your peak fear, which is the bottom. And then you've got your recovery, which is the next phase. Then you've got your, let's say, overextension, or what would you call it? I don't really have a good name for it, but you've recovery, you've got your bull market, which is like a healthy bull. So peak fear, which is like your bear. Bull market, and then you have your euphoria, which is your heavy speculation. That's when things go crazy. And you'll know this when it happens. This is when all the stupid stuff happens, like GME, the GameStop, Dogecoin, fucking craziness. It's when things, NFTs selling for millions of dollars, when it's just a picture of a rock, all that kind of shit. We're not in this phase yet. We're not in the bull market phase yet. We're still in the recovery phase. Bull market is consensus for quite a while. There will be a consensus bull market where everyone agrees and the markets do grind higher for a while. And then it'll go into that euphoric speculation phase. But that's not there yet. We're still in that, for me at least, we're still in that recovery phase. And then you look at Bitcoin and the same thing. You've got one scary looking weekly candle, but it's still just in the recovery phase. Typically, Bitcoin bull market sentiment doesn't really take over till all-time high. And every single time Bitcoin's gone to all-time high, it's gone some amount beyond that, right? So if it just grinds up to there and then goes beyond it, that's when the consensus bull happens. And then depending on how it moves, your speculation euphoric phase can be really short. It can be extended, it can take longer, it can be shorter, but that usually, the past doesn't always predict the future. But with the fact that central banks are all printing more, or at least easing up again, they're signaling the path towards printing more. The governments, especially the US, are running full-on deficits and are injecting liquidity. That overextension hasn't happened yet. So while the markets are still in recovery, that's the time to be positioned. The best time to buy is in the peak fear. We're obviously past that phase. Any fear that comes in now is going to be more likely to be a shakeout, where it is a dip to buy, it is a correction to buy. I talked about this yesterday. This could take several weeks, right? This could be several months. We could go sideways for many months. But it is a time to buy. It's your last time to buy before we get into full consensus bull market. People in our little bubble, like we call this a bull market. Altcoins are going up, Bitcoin's going up. You know, when your coins are going 2x, 5x, 10x, it's 100% a bull market for us. But the average person just looks at crypto and goes, what? Bitcoin's what? 42? Yeah, okay. Well, wasn't it at 69? Yeah, that's not a bull market, right? Anything below 50, it's not a bull market to them. Because they last remember buying the top. They bought 55, 60, 65, 69. Same on Ethereum. They bought Ethereum above 3K. Ethereum's at what? Ethereum's at 2,600? Yeah, it's not a bull market. So we will get to that point. Then you will have broad acceptance of a bull. Then you will have speculation and sort of mania phase, which just always happens because markets, just like they go oversold, they'll go overbought at some point. I don't know if that'll be here, above all-time high, how far above all-time high, but the expectation is that is the eventual outcome. So it's important just to remember that, at least for me, to where we're not even at big monthly resistances yet, which is anywhere up here. And then you've got your big monthly support, which is kind of like that 30k level. And we're stuck in between them. And it can ping pong in there for a while and not be considered a bull, just still be part of the kind of early bull, reaccumulation, recovery year, consensus bull market begins, and then euphoric phase.